President Kaplan, it's Kelly here, and just one more to kind of dig into your explanation of why we don't need to continue the pace of asset purchases. In other words, if you say we have a supply, not a demand issue in the economy, can you explain how the labor force supply ties into that? So if we have people who have left the labor force for early retirements because they have work from home flexibility, maybe allows them to live somewhere differently, lower cost of living, only one person has to work and so forth. Can you tell us what you're seeing in terms of those quote unquote dropouts and how that affects the supply side and overall the sort of fundamental strength of the economy?
So there's two types of supply issues. One is materials, semiconductors, a broad range of supply-demand issues for materials, and the Delta variant may actually make those more prolonged because they affect the ability to produce and to produce globally. And I think what contacts are telling me is semiconductor shortages, for example, are likely, in their view, to persist longer than people might be expecting. And the demand for semiconductors is increasing while the industry is trying to increase supply. So one person described it as trying to go up a down escalator. We're trying to increase production as fast as we can, but demand is also increasing. So that's one set of issues. The second set of issues is labor. And as you pointed out, we think at the Dallas Fed, there's been approximately 3 million retirements since February of 2020. Many of those people may not come back into the labor force. And then there's been 1.25 million to 1.5 million people who are caregivers, mainly working mothers, who have left the workforce. I'm hopeful that with expanded daycare, schools reopening in person, some percentage of them will come back. But the point is, the labor force is tighter than the headline statistics indicate. The number of job openings in the United States is at a record. Quits rate is historically high. And so all that tells me these supply-demand imbalances are likely to go on for an extended period of time, but they don't have to do with demand. They have to do, they're going to create supply issues. And so these purchases are not terribly well equipped to deal with those issues. And I think it'd be healthy for us to recognize that.
President Kaplan, to an extraordinary degree, and I've been covering the Fed for a very long time, Chair Powell and other members of the committee, such as yourself, have talked a lot about how the importance of what the Fed does for average Americans. But today, the government reported real earnings. When it reports CPI and inflation, it says how much wage gains have been deflated by inflation that's out there. And they're negative now for, I believe, the 4th straight month. How does the Fed step up and argue that it's now doing right by average Americans and average American workers when, in fact, the inflation that it's abiding is eroding wage gains?
Yeah, so I spent a lot of time, as you know, in low, moderate income communities in my district. And what I see time and time again in my conversations, people in those communities are reminding me our mandate is full employment, but it's also price stability. And the share of wallet, as you just pointed out, that low, moderate income communities are spending on gasoline, cars, other items, it is creating challenges for them to make ends meet. This is, again, back to our purchases. This is one of the reasons why I would prefer, from a risk management point of view, to ease off the accelerator and reduce the RPMs on what we're doing, because I think these imbalances, we're going to have to be patient and allow them to unfold. But I think anchoring inflation at 2%, I take that very seriously. It's a critical part of our mandate. Inclusive growth, inclusive prosperity is not just jobs, it's also price stability.
Shepard Smith here. Thanks for watching CNBC on YouTube.